I'm Matt Miller. This is Bloomberg Rewind. Big losses on Wall Street as headlines out of Europe continue to drive trading. What's new? We'll have reaction and analysis from many of the world's most accurate economists and influential policymakers. In this hour, you will hear from, among others, Morgan Stanley Chief U.S. Economist Vincent Reinhart, former Health and Human Services Secretary Donna Shalala, and Ford CEO Alan Mulally. It was a tough day for the car makers. Here to walk us through everything, financial strategist and author Eric Best of consulting firm Best Partners. Eric, welcome to Rewind. Pleasure to have you.
Thanks very much. Great to be here.
We're going to start off, as we do every day, with a look at the markets, and it's not a pretty look today, folks. A lot of red across the board. The Dow shedding 390 points. That is not a typo. The S&P and the Nasdaq both down over 3.6%. In fact, the S&P is seeing its biggest decline since August. Once again, it is Europe, more precisely Italy. Investors are concerned EU leaders may not be able to keep the Eurozone together. Italian borrowing costs surging to a record high today. And here's one reason why investors are so worried about Italy.
On the one hand, Italy is too big to fail, but on the other hand, they're too big to bail either. And that's really the conundrum here.
And there is also some non-Europe news out there today. Keep an eye on Cisco. After the closing bell, the company came out with a much better than expected quarterly profit and sales figure. So hopefully that's something that could boost the market a little bit tomorrow. You see Cisco trading up in the after hours. We're going to hear, though, from Eric right now, and he is a bear. So you're one of those who's going to be saying, I told you so, on a day when the Dow loses 390 points.
Well, I would not want to be so ungracious, but I found myself thinking, okay, what's the story of today? The market is looking at the Emperor of Europe and saying the Emperor has no clothes. We have not named a tailor. We're short on thread, and it takes time to grow sheep. So
it's not just a short-term problem, you're saying. This is a long-term problem. It's funny that we waited until today to react, because it wasn't like Berlusconi seemed really quick to resign, right? I mean, he's survived 50 no-confidence votes. He's not the kind of guy who just picks up his stuff and leaves.
Yeah, well, I thought it was funny that he said, okay, look, I'll resign if you approve an austerity measure. And then when people check, they discovered, well, nobody's actually written an austerity measure. I mean, there's nothing on paper. So what exactly are we talking about? And I think the signal there is, no, they're deeply unprepared.
We're going to do our daily surveillance bit right now. Take a closer look at Europe. Hear from J.P. Morgan senior global economist Joseph Lupton. He explained his Eurozone outlook to Tom Keene.
I mean, policymakers have been, in a sense, the kind of proverbial frog in the boiling water, putting out little fire after little fire without recognizing the bigger problem at hand and not trying to get in front of it. The EU summit of a couple weeks ago, the ink hasn't even been on the paper yet, let alone dried, and markets are already puking on that. So something else needs to happen. Concerns, obviously, the pressure points right now are in Italy, but something bigger in the form of someone's wallet needs to step in to provide a backstop.
If I get this right, Italy's actually okay, except there's no growth to match what's relatively responsible debt. There's just no growth, right?
Responsible deficits, not so much responsible debt. I mean, remember, Italy has a debt to GDP ratio of about 120%. And, you know, growth is really the key here. I mean, the fundamental problem with the region is too high debt and not enough underlying potential growth. You're getting some cyclical downturn. That's to be understood as governments are trying to delever. But in a real fundamental sense, a country like Italy has a potential growth of about 0.5%. That's not going to get it done. There's a long period of time where markets felt like you had the region as a whole and there was going to be some backstop there and Italy would eventually work itself out. There's certainly low-lying fruit in terms of the type of structural reforms that can be done to try to build that potential growth rate, and that's going to be the real the narrative for the next couple of years as policymakers try to figure out how to put in the reforms to get potential growth back up.
What does J.P. Morgan presume Spain will do within the crisis we observed this morning? Will they follow on and become another Italy?
Well, I mean, I think, getting back to the growth issue, Spain does have a kind of a stronger fundamental potential growth path, and that does heal a lot of wounds. You also have a political backdrop that is a lot better than the one that we're seeing in Italy right now. There's a lot of political turmoil going on in Italy, and that's getting markets equally concerned. So I think what you're seeing there in the spreads is indicative of Italy being cleaved off, and markets, in some sense, rewarding Spain relative to Italy.
And that was J.P. Morgan Chase senior global economist Joseph Lupton. Eric, what do you think? I mean, former Federal Reserve Board economist. Big deal, right?
Yeah, well, I think J.P. Morgan made the prediction in early 2011 that U.S. was going to be an engine of growth, and I think the number was something like 200,000 jobs a month. And I read that today and thought, really? Not yet. And as for Spain, I don't know where the good news is in Spain.
He seems to be optimistic about growth in Spain as well, and the political system there, at least compared to Italy. But then I was listening to Tom's radio show this morning, and they had an economist out of Brussels who said every political regime in Europe is good compared to Italy.
Yeah, I mean, if it's the contest of who's the tallest midget, it's not very encouraging. And I don't think Italy has anything to show for our confidence that, okay, right now they're all going to step up and do the right thing. I don't think they're going to step up and do the right thing.
What do you think about, the phrase, or at least some version of the phrase, too big to fail, too big to bail, was going around today about Italy? I mean, is it a catastrophe waiting to happen, or is there a solution?
I think the numbers are simply too big. You hear that from very credible sources, that the numbers in Italy cannot be handled by the ECB as if they were Greece, and therefore what? There's no there, or they're kicking the can down the road. We've run out of road. Now what?
Haircut? Default?
I think you get to some version of money printing, and we're trying to figure out what do you mean by money printing.
All right, it'll be interesting to see. I mean, the funny thing there, I think, is that you saw gold come down today. We're going to continue talking about this when we come back. Morgan Stanley's new chief U.S. economist, Vincent Reinhart. You've heard of him before. In connection with Rogoff, the Reinhart name goes there. The dangers he sees ahead for the ECB and the Federal Reserve. That's after the break.